91%. That's the exact increase in stablecoin volume moving through Algorand over the past 30 days, hitting $436 million. Yet, the price of the native token sits at 8 cents, effectively at all-time lows. You are looking at a massive divergence between network utilization and market valuation. Is this the ultimate trap or the accumulation phase of a lifetime? Welcome back to Crypto Yield Pro. Today, we are looking at the weekly chart for Algorand, comparing the brutal on-chain financial realities against a technical setup that has historically produced rallies of over 400%. I'll show you my exact load zone, invalidation level, and specific profit targets. If you are holding this token, you need to see this data before making your next move. Right now, Algorand is trading between 8 and 9 cents. The market sentiment surrounding this project is practically non-existent. Most retail investors have abandoned ship, moving their capital into the latest shiny object. But as a data-driven investor, times of maximum apathy are exactly when I start paying the most attention. We are looking at a weekly time frame, which strips away the intraday noise and shows us the true market structure. Over the past 4 weeks, price action has been grinding sideways at this ultimate support level. This video matters now because we sit at a critical juncture. A breakdown below 8 cents changes the macro thesis entirely. If we hold this level, the risk-to-reward ratio is highly asymmetric. The technicals suggest a massive move is pending, but there is something in the fundamental on-chain data that changes this picture. We cannot just look at the chart in isolation. We have to understand what is actually happening on the network to determine if a reversal has any real fundamental backing, or if it's just a dead cat bounce. The fundamentals tell us exactly why this 8-cent level is a literal battleground. Let us look at the hard data. The narrative around Algorand is shifting aggressively toward AI and institutional infrastructure. They fully integrated the X402 standard. This is production-ready infrastructure, enabling native micropayments for AI agents. Combined with a recent plugin making Algorand native inside the Claude code environment, you see a clear play to capture automated, high-frequency, machine-to-machine transactions. They are also shipping cross-chain EVM account abstraction. This means anyone using MetaMask or Rainbow can plug straight into Algorand applications without needing a separate wallet. That's a massive friction point removed. Active wallets hit 49.5 million, and staked assets grew to 2 billion tokens. But we must separate marketing from math. While stablecoin volume surged, the network is fundamentally underutilized compared to its competitors. Algorand is currently ranking 18th in transactions per second, averaging just 5.8. Core developer activity is lagging as well, sitting at 60th place for code commits over a 90-day period. Most concerning is revenue. Over the last 90 days, the network generated just $24,600 in fees, ranking 21st among Layer 1s. After subtracting token incentives, the network is operating at a net loss of over $112,000. On top of that, decentralized finance yields are completely uncompetitive, offering less than 4% on stablecoins like USDC and under 2% on ALGO token. Considering Folks Finance, the only DeFi yield provider I found on Algorand blockchain using DeFi Llama. But why does this matter? Because a network operating at a loss relies on token emissions to survive, which creates structural sell pressure. The technological upgrades are brilliant, but they have not translated into organic cash flow yet. This means any short-term price appreciation will likely be driven by speculation rather than fundamental revenue. And that's exactly why we need to rely on the technical analysis to manage our risk and dictate our strategy. I'll show you why this matters in the chart right now.
Let us zoom out to the weekly time frame.
ALGO is currently rejected below both the 21 exponential moving average, which is the red line, and the 200 simple moving average, the green line. The trend context is objectively bearish. However, price is sitting right at the 8-cent support zone. This is a historic floor. We have an ascending trend line connecting the bottoms from the 2023 lows, giving us a structural foundation. Conversely, the descending trend line from the July 2025 local top, the white dotted line near 10 cents, is our primary immediate resistance. This must break with a confirmed weekly close for any upside continuation. I anchor my Fibonacci retracement from the December 2024 high of 61 cents down to the 8-cent lows. The 236 level is at 20 cents, and the 382 is 28 cents. But before we even think about those levels, we must clear 14 cents. If the price can break and close above 14 cents, it establishes a higher high, effectively changing the macro trend. Now here's where it gets interesting. Look at the Heikin-Ashi Relative Strength Index at the bottom of the chart. It recently hit extreme oversold conditions, the lowest levels seen in 3 years. Over the last 4 weeks, velocity has slowed down, forming a bullish divergence against the price action. I have marked this divergence with yellow arrows and the past reactions with green circles and vertical lines. Historically, the last 3 times this indicator dropped this low, Algorand saw price appreciations of 204%, 421%, and 111%. So, here's my exact position strategy. My last video about Algorand was posted on January 22nd, and my long-term trade presented back then is still valid. To be clear, I have a long-term bag from past profits on ALGO, representing a maximum of 2% of my total portfolio. I keep these long-term holdings secured offline in a hardware wallet for absolute safety. I'm not selling those even if we drop below support. But for a swing trade, this 8 to 10 cent green box is my load zone. I have initiated another very small dollar cost average position here purely for speculation. The risk-to-reward ratio is highly favorable, but I have to be honest, the current network usage is terrible. My stop loss is a strict weekly candle close a bit below 8 cents, marked by the red dashed line. If we close below that, the setup is invalidated and I'm out of my short-term trade. For take profits, I'll be using a manual trailing stop. My targets are the green circles at 14 cents, 20, 30, 40, 60, and finally 90 cents. As we hit target 1, my stop moves to entry. Hit target 2, stop moves to target 1, and so on. Capital preservation always comes first. When we synthesize the weak fundamental revenue data with the highly compressed technical setup, the game plan becomes very clear. The technology is advancing, bridging Ethereum liquidity and AI agents, but the chain lacks the immediate cash flow to sustain higher valuations organically. Therefore, we treat this strictly as a technical mean reversion trade. The best case scenario is breaking the 10-cent descending trend line fueled by the Heikin-Ashi RSI divergence, pushing rapidly toward the 14-cent macro pivot. The worst case scenario is failing to hold the 8-cent floor. A weekly close below triggers my stop loss and signals deeper capitulation. My timeline for this trade is medium term, playing out over the next 3 to 12 months. If the network suddenly shows a fee generation spike from the new EVM integration or the X402 standard, my thesis shifts to extremely bullish. Until then, we trade ranges. In my honest opinion, Algorand is presenting a generational technical setup at historic support, but it requires strict risk management due to underlying network revenue weakness. Let the chart decide your next move, not your emotions. Remember, surviving in this market is about managing your downside, so the upside can take care of itself. If you found value in this data-driven approach, please hit the like button and subscribe to the channel. Join my free Telegram group. We have over 150 members, and it is the best place for daily market updates. The link is in the pinned comment. I highly recommend watching my last video about Algorand for the full story. This is not financial advice, just my personal market strategy. Stay safe, trade smart, and I'll see you tomorrow in the next one.